Will closing at the end of the month save you money? This myth is not true. That's because interest on a mortgage is paid in arrears, meaning that you use the money first, then you pay the interest second. And that's very different than you may be used to by renting, where you pay at the beginning of the month for the month that will follow. Some people try to close a mortgage at the end of the month because they think they'll pay fewer days of interest at closing. For example, if you were to close at the end of March instead of the beginning of April, here's what would happen. You would pay for just a few days of interest to finish out the month of March, but then your first regular mortgage payment would be due about 30 days later on May 1st. So what would happen if you missed closing at the end of March and instead closed April 1st? You would have to pay a full month of interest to finish off April, but then your first regular mortgage payment would be about 60 days later on June 1st. So as you can see, there really is no difference aside from timing. You end up paying roughly the same amount by June 1st regardless. So no need to worry if your scheduled closing goes from the end of one month to the beginning of the next. I'm Robert Weinberg, and that's this week's Mortgage Minute.